My name is Michael Guyette, publisher of the Lead Lag Report. Joining me for the hour is Greg Duncan. Greg, introduce yourself to the audience. Who are you? What's your background? Have you got involved, interested in market? And are you bored easily?
Well, hey guys, my name is Greg, and I'm a fourth-year trader focused on technical analysis and momentum swing trading. I graduated from Purdue University 2 years ago with a business degree, and really what got me into the market was the COVID crash. I'm sure that's not a surprise to many, as that's when a lot of people started, but just seeing the markets tank day after day was something that really interested me. And then obviously, the psychology behind it all got me interested. So yeah, that's when I really started studying the likes of people like Mark Minervini, William O'Neill, Nicholas Darvis, Jesse Livermore, just the traditional momentum swing and position trading type technical analysis traders. And yeah, I mean, that's really what got me interested. But, do I get bored easily? I try not to in the market, because boredom will cause you to start making dumb decisions.
So you mentioned the business degree. I myself graduated with a finance and management degree a long time ago. But did you find that the things that you learned in getting the business degree have at all helped in terms of thinking about trading and investing?
I would say, yeah, honestly, overall, just like getting a good, so I graduated with a general business degree. So I took, finance, econ, just the intro classes to pretty much every facet of business. And something that's useful there is just being able to come into the market with an open mindset in terms of just different strategies, different, points of view, and, just being open to what people have to say. I think there's a lot of different ways to make money in the market, whether it's, value investing or momentum or whatever. So yeah, just, and you can learn from all those types of strategies and build it into your own. So I would say, yeah, that's probably the biggest thing. Just a general business degree has helped me, coming to the market with an open mind.
I'm going to assume it also gives you some degree of structure, right? That you know that there are certain things that you can read, certain textbooks, certain ways of looking at a new domain that you're getting involved in, rather than just what you see on X/Twitter in terms of people just kind of YOLOing at things.
Yeah, for sure. I mean, structure for any strategy in the market is literally the biggest thing to being successful. And that's not just in the market, it's everywhere. I've been an athlete all my life, and, I've competed at very high levels throughout the, entire world circuit. And structure there is everything. I mean, you have practice at set times every day. You know exactly what you have to do. The market's the exact same thing. You have to have a pre-market routine, a during the market routine, a post-market routine. I mean, all that stuff adds up. And whether it's a business degree or any sort of sport or schooling like that structure is what allows you to progress and grow.
What sport did you play?
Diving.
Diving?
I'm still doing it, but you're training for the 2024 Olympics. That's the goal.
Good for you. Yeah, no, that's I always give a lot of credit to those that play at a high level. Obviously, if you're going to be an athlete, you got to be very disciplined. And discipline is kind of an interesting thing, I think, when you're discretionary. Yeah, I've got rules-based strategies to get the emotion out purposely.
Exactly.
Right. And, have to be disciplined on that, because that's what the prospectus is designed to kind of express. How do you think about discipline the last 3 years? Because it's been, for lack of a better way of saying it, pretty wild ride.
Yeah, it's been insane. I mean, like I said, I started trading in March of 2020. April's when the market got real good. Luckily I was able to sidestep all the mess. But, I started in 2020. It was really easy to be undisciplined and have no structure and still make just a ridiculous amount of money. And then, come February 2021, that's when, at least in the growth investing side of things, that's when stuff hit the fan. And so if you don't have that discipline and if you don't have that structure, it's so easy to get emotional, like you said, and just start YOLOing your portfolio into things just to try to make back money. And that mindset of not having discipline or not having structure is the easiest way to lose all of your money very quickly.
So you mentioned February 2021, and that's when all the kind of meme stuff started going absolutely bonkers, and the media was also the top for a lot of things.
Yep.
But walk us through how you were thinking about or reacting off of that period. I mean, the narrative was return of retail, return of retail, return of retail, return of the discretionary trader. And then just as the headlines were saying that, everything started, kind of breaking apart. But what were you doing throughout that period?
Well, it's actually funny. So January of 2021, I had my best month ever. I was up like 21 or 22% in a single month. And I saw Mark Minervini was also competing for the US Investing Championship at the same time. And I saw his return of January and we were right there. And of course, me being a year and a half in, I was like, oh, dude, I'm trading as good as Mark Minervini, like multi-time US investing champion, all this stuff. And that was quintessential top action, right? Like some dude with a year of experience thinks he could trade like Mark Minervini. And I mean, after right into February of that time, like my accounts hit new highs. And then since then, I'm still trying to get back to it. And that's kind of the oh crap moment where you realize like, oh, this is actually a hard game. All that news and stuff, all the discretionary trading, retail trading's back, AMC, all that stuff. It sounds good in theory. It's really easy to make money during those times, but it's actually keeping it. That's the hardest part. And so when you get 2 to 3 years like we've had over the past, recent times, it's difficult. And you begin to see how easy it is to lose money because if you don't have discipline, like we talked about, like I said, it's easy to focus on the wrong things.
Oh, I appreciate the honesty because there are a lot of I think retail discretionary traders are like, oh, I'm making new highs every single month, and it's all largely I think nonsense or outright luck.
Oh yeah, I mean, dude, I almost tweeted this morning like I just wish there was more accountability on this platform overall, like from any type of trader, because it's so easy to hop on and just see, oh well, I'm up 10% today. What do you do? And, if you have a red day on your portfolio, you're like, wow, I suck at this, And that's why I've tweeted a bunch just about different mindsets to have towards social media, especially while the amount of information we have is just infinite. But you can find any sort of person on this app. And, if you can find someone who's real and accountable, and that's who I try to be, I'm not here making 10% on my account every day. In fact, I'm going through it just like, 99% of people are. And so that's just the biggest thing about social media and the market right now. It's just so easy to find people who think try to show that it's like the easiest game in the world. And it's just not.
How much do you think that wrong mentality is driven by social media versus aid? And I know there's a connection there, but where I'm going with that is, I think the difference between a novice, what I call the nouveau bulls, right? And somebody who's experienced is somebody who has experience that's been humbled and recognizes that drawdowns are part of the game. You got to stick to your approach, even when you're in that drawdown, and not stop. How do you think about that sort of part of it?
Yeah, I mean, there's the less amount of experience you have in the market, I think the easier you think it is. And so whoever you're trying to sell to, if you have like some sort of service or whatever, it's easy to put on this facade like, oh, the market's easy. Like, let me show you how to do it. When a lot of times that's what people on social media are looking for, right? Like you're looking for someone who's willing to go out and say, this is the way, follow me. In the market and a lot of things in life, there's not an easy way. Like following what some guru or guru says a lot of times doesn't work out. And whether that's someone, the reason is because someone's just looking for something to do or whatever, it's just never that easy. And so I think, like I said, one thing that I want to be consistent in my messaging, for the content that I put out is like, look, I'm struggling too. I mean, this is a real game, and kind of what you just said about drawdowns. Like, I think you're going to be in a drawdown like 95% of the time that you're in the market, as long as those drawdown lows are just making higher lows, then you're doing something right.
I also think you just, because you're an athlete, you probably have more respect for the process of building, your skills up, right? I mean, it's when I'm sure, you correct me if I'm wrong, this when you start off diving, it's like everything else, you probably suck at it, right? The more you do it, the more your muscles get acclimated, the more pain you might feel, in a particular dive, the stronger you get. I do personally think that if you have an athletic mindset, you're probably less likely to fall for the bullshit that you often see on social media.
For sure. I mean, just think about Steph Curry, right? Like, okay, he'll get 50-point games or he'll get career high games here and there, maybe once a season if he's lucky. but the majority of the time he's getting 20, 30 points. And obviously that's incredible in the NBA, but that's his baseline. Like technically he would be in an all-time career point game drawdown, you know? And so that mindset of like, okay, if I can just make my worst days a little bit better and I'll keep growing over time. And then obviously, you know, when I get into a good market, then I'll be able to, one, I'll have the capital to be able to capitalize. And two, I'll have the mindset of like, okay, this is the time to hit it. I've learned a lot. I've been at a drawdown. Now it's time to get back. I mean, yeah, like you said, it's just any sort of, whether it's a sports mentality or just a level-headed perspective of like, okay, my life's not going to always be sunshine and rainbows. My account's not always going to be hitting new highs. Like there's always going to be some sort of drawdown or hardship. And however you deal with that is what's going to determine, you know, do you have anything left to make it out on the other side? It's the same with sports too.
Yeah, and confidence is a big part of that, right? I mean, you have to have confidence that, you know, you'll get to the Olympics in order to train to get to the Olympics, right? I mean, it's the same sort of idea, right? You got to have confidence when you're in a drawdown that you're going to make new highs. Otherwise, you're going to stop and never make new highs.
Exactly. But and the hard thing about confidence is so many people, I think, look at confidence as being something that's results based. And there's definitely merit to that mindset. But confidence in it itself is something that you build every day by going through the process, by going through your routines, by doing the right things. And that's really where the confidence comes. Because like I said, if you're going to have a bad practice or a bad game or a bad couple months of trading, like, and your confidence is something you've derived from performance, then you're going to have none, you know, and that's where the real growth happens, when you realize confidence is something that's built through your daily actions and not so much the results. And that's the same thing as, you know, I don't dive or I don't trade to, you know, have some incredible outcome. I do it because I love the action of trading or the studying of the market or whatever. And that's really where, you know, the love and the confidence comes from. If you don't have that, then long term, you're just screwed for sure.
That's always been a kind of a personal belief of mine. I think a lot of people think that you get confident after you've been successful. And, you know, I think because this is what you're saying, you have to be confident to get successful.
Exactly.
Which almost means you have to be a little bit insane, right? Because you have to somewhat fool yourself, right, into believing that you will be able to achieve something you have not achieved yet.
Yeah, I mean, at the start of anything, right, you have to have this sort of, from an outside perspective, irrational confidence. Like people will ask, where did his confidence come from with no prior results? And that's what separates the good people from the great people. I mean, all the most successful people in any endeavor, it's common to hear them say, yeah, I believed in myself when no one else did. And it's not something that's by chance. I mean, that sort of mindset and that sort of characteristic is what separates the people who succeed and who don't. I mean, the only way you're going to get through hardship is by having the confidence that you'll get through the hardship. And that's what the market teaches so effortlessly.
All right. So let's go back to, you started in 2020. There's a lot of emojis and things that people are throwing in gippies, right? There's a way of identifying the kind of gamification part of things. But yeah, I retweeted, I shared at the top of the nest, you know, the books that you read when it comes to trading, investing. I've myself spent a lot of time, as it sounds like you have, reading, which is seemingly a lot of skill nowadays. These kind of long, these kind of big books. And, it's not like these trading books are necessarily always right, but it gives you different perspectives. And I personally believe the more you absorb, the better you'll be, right? But talk about just sort of how you went about, going back to that term structure, the structure of your reading material. Because as you alluded to, you've read a lot of books, but some of them, or maybe most of them, just aren't worthwhile.
Yeah, I mean, look, there's this quote by Naval, and I don't know the exact quote, but he basically says, there's an infinite amount of information out there. There's the point of what he's trying to say here is you have to be able to choose and decide which things are worthwhile of your time. And yeah, I mean, you could read 100 different trading books, all on different topics. And I think that's probably good to do at the start. But once you find something that resonates with you, you got to lock down and just read the crap out of those, study the crap out of those. Cause that's the only way you're going to find consistency in your thought. If you're trying to jump from book to book, from concept to concept, you won't have any structure in your thought. And so if going back to what you actually do to, find those 10 books is you just got to, from the start, have an open mind and say, okay, well, this may not resonate with me. Let me just move on. And you don't have to read 100 books all the way through. If you got 2 chapters through and you're there, well then, okay, move on. But yeah, I mean, the 10 that I've read, the structure that I followed to get there was, I knew the swing trading / technical analysis niche was where I wanted to go. And I just looked up a bunch of the best books. And then I, was looking on Twitter, like who are the most followed accounts in that niche and what are they tweeting about? And then Livermore, O'Neill, Darvis, Minervini were all kind of in that space. So I was like, all right, well, let me just lock down and read those. And then you hear about success stories of people who read those books and you're like, okay, well, then there's something there. It's not just them doing it. It's hundreds of thousands of other people. And yeah, I mean, that was the simple structure I followed to just be like, okay, this is the niche I want to go to. And it resonated with me. And so I started reading the crap out of them. And I was spending, 30 minutes to an hour per day of just, handwriting notes in these books. I still have my How to Make Money in Stocks by William O'Neill, and it's got, just post-it notes and it just looks beat up, but it's got just a ton of great information and ways of me writing stuff down to just memorize the whole thing. And, that's how things solidified in my brain.
And it doesn't look, as I go through that list, that they're necessarily, pure technical analysis types of books.
No, and that's the thing. Like, at least I've noticed over the past 2 to 3 years, my book selection has changed, right? So I got the technical piece down, and I understand that point pretty well because you can just study the crap out of it to get it. But, as you develop as a trader, it becomes more mental. Everything becomes more mental. And it's the same thing in diving, like my sport. At some point, it's not so much the action of diving, but what goes on in between my head. And it's the same thing as trading right now. I know what I want to trade. I know how to trade it. The difference between me and someone who's very successful is the psychology. So as my books progress, right? So there's like, Darvis, how to make, his box theory. You got Livermore and his just, pivot point method. But as you dig deeper in these books, it becomes more of a psychology lesson. How are people thinking about the market? What are they doing that's different in terms of their performance, their mindset towards getting better that I can learn from and that I can start to replicate? And, Lessons from the Greatest Stock Traders of All Time by John Boyk in that thread. It's not so much about what strategies they use. It's the mindset that they use to go from good to great. And so I think, the books I've been reading and rereading recently have all been by Mark Douglas and, just his point of view on trading psychology. And I think that's where my next focus as a trader is going.
Yeah. And I'm personally a huge fan of behavioral finance. Yeah, I spent a lot of time going through a lot of the sort of psychological studies, the white papers themselves. And I think it's often missed because it takes a little bit of effort to actually think through, behavior versus just looking at a chart. But obviously you do quite a bit of technical work from what I'm seeing. What do you find works and doesn't work when it comes to the technical analysis side?
Yes, I could go on and on about that. But what works for me is looking at TA as almost a carrier, a means to a return. A lot of people think of TA or their strategy as the end all be all, and it's the only way to go. There are so many different ways to interpret technical analysis. There's RSI, there's different forms of RSI, there's MACD, there's all that stuff. And you can get paralysis by analysis so easily. And I think that's one of the crowd mentalities is jumping from strategy to strategy, technical indicator to technical indicator. It's not an end all be all. It's never going to be 100% correct. And that's really that's the mindset that I've adopted that works. Whether or not, I can get a winning trade off of a TA based strategy 2 out of 5 times, cool. It's never going to be 5 out of 5. So I would say, just getting that mindset of you have to find the strategy and the indicator that works for you. Something that works for me may not work for you and vice versa. And I think that's really where the biggest misunderstanding of technical analysis comes from just the general pop.
Yeah, and I also think that there's an impression that technical analysis is about getting better upside. I've referenced this example before, but I know the guys, one of the guys at the CMT Association who works there, and he's always noted to me that they often see an uptick in people wanting to get the chartered market technicians charter, usually after a bear market, right? Because the appeal there to class is more of a downside protection. Is it fair to say that you view it the same, that it's less about sort of, this is going to go up substantially versus, this is where I can define my risk levels?
Yeah, there's two pieces, right? So there's the risk piece and then there's the timing piece. And I think those two, when combined, are what makes TA work. You can have a thesis on a name and it could be undervalued, overvalued, whatever. But until the chart, and this just goes back to that behavior or the psychology of it all, until the chart says this is the right time to be, trading with the market, you shouldn't do anything. And I think that's what TA is all about. One, like you said, you can manage your risk, but two, you can find that pivotal point. And this goes back to Livermore and just the great traders. You can find that pivotal point to when the market aligns with your thesis. And that's when you can hit it hard. Until then, it's a bunch of waiting. I mean, that's really all it is. And that's where most traders are really deficient at, is the waiting piece.
Right, which goes to the name of the space, trading your way out of boredom. Right, that's
exactly.
We're hitting on it, because I think you're right. It's it's boring to wait for a fat pit. Right, people are hardwired to want to get the consistent returns, the singles, but the reality is most of the time the game is won, from just getting one massive home run. Correct.
Yeah, and I mean at the same time, you could go multiple months without hitting any singles. That's kind of the thing that people don't understand. They want to just hit singles all the time. The market's never that easy. Maybe 2020 you could hit single home run and then just keep repeating that. But since 2021, it's been a hard market to even just get singles depending on your style. And yeah, that boredom piece and looking for action at all times, trying to hit singles at all times, it's just not reality, especially with the type of trading that I do.
Right, which goes back to sort of the problems with social media, because it makes you want to take a trade or makes you want to, try to keep swinging for those singles, and all you're doing is just exhausting yourself.
Yeah, and it goes back to who you follow, right? If you don't have your following aligned with your strategy and what you want to do, you're always going to find someone, executing their own strategy when the time's right, and that's may not be when your time is right. So when you see people on Twitter or on X, whatever, saying, "Oh, I bought this today and I made a ton of money," and you're just sitting there like, "Well, dude, I didn't do shit today. What am I doing wrong?" And then that mindset is really what snowballs into, "Oh my God, I'm behind. I'm not trading right," all this stuff. Whereas again, you have to have the confidence, you have to have the discipline to sit back and say, my strategy is going to underperform when others outperform. But there's going to be a time when mine is in the green and I got to be hitting it. And so keeping your mind fresh and waiting for that moment, kind of that fat pitch, is what will separate, or what does separate, the Mark Minervinis from everyone else.
Part of the disciplines around knowing how much to weight a trade, right? I think this is probably, I have nothing to back this up more than just intuition, but I suspect the reason why most of the studies show that retail traders end up, not staying in the game, over a 2-3 year period, is they get some winning trade, the momentum's there, they're making money, that stock is treating them well, and that causes them to then keep on buying until, something massive happens, and they end up losing more money than when they first bought because they kept on adding to the winning position, which again goes back to weighting. So how do you think about sort of risk weighting in your own portfolio?
Yeah, I mean, there's a couple different pieces there, but the main mindset that I try to adopt is that, going back to technical analysis, it can be used as a hedge against your emotions, right? If I'm in love with Tesla and I'm just going to diamond hands the shit out of it and just buy it until it goes, to zero, basically, because I love the company. That mindset could have been just easily altered with an idea of, okay, maybe I can keep buying above the 50-day moving average. But the second price goes below 50-day moving average on volume, I'm out. And so that just emotional piece of like, okay, well, I love this company or I love this chart, but it's broken at this point. And that's where the TA piece comes in to say, this is where I'm going to manage my risk. This is where I'm going to turn off my emotions and say, this is where I'm getting out. You can avoid that overweight feel of your portfolio being in one name. And then you can avoid waking up in the morning and thinking, oh shit, Tesla's down 1%. That's, a new car or whatever your, portfolio size is. Just being able to sit back, reduce your emotions, and rely on what the chart is telling you. That'll make it easier to, allot your portfolio to different names that are working at the time, right? Like I want to be heaviest in the names that work. And then if they break this level, the size of my portfolio into that name is just reduced. There's no emotion around it. It's just my rules. And so that's kind of where your system has to overtake your emotions. And that's where you actually start to get some consistency as a trader.
Okay, let's talk about as a transition, kind of the current environment. I have my own kind of macro thoughts, but I always go back to path matters more than prediction. And yeah, but if you're a discretionary trader, maybe what's going on around the macro and kind of global side doesn't matter so much for NVIDIA as clearly. Right? Which I keep, and I keep going back to, I'm not saying to short NVIDIA. I'm not saying puts. I personally think that NVIDIA, obviously people made a lot of money on it, but, you can make a lot of money in years, which I believe it is. The question is, can you keep it? And maybe the risk manager can give you that, right? Maybe. But what are you currently trading, and what kind of your overall sense of, the way things are looking now?
Yeah. So I try to keep it really simple when I look at the general markets and timing when I want to be, invested versus when I don't want to be invested. And so right now, when I look at, I don't know if you guys all have computers near you, but when I look at, SPY or QQQ or just the general markets, right? Like QQQ is under the 10 and 20 EMA. SPY is under the 10 and 20 EMA. So short-term direction for me is yellow to red. Like I'm in cash and I'm currently have like 98% cash position. When we're above the 10 and 20 EMA, that's when I feel comfortable in putting money to work. But, we've ran so much this year after such a hard 2022 that, we haven't even touched the 50-day yet since reclaiming it back in March, if we're looking at the SPY. So in terms of overall market analysis, I'm very patient here. And there's, the macro view, I don't have so much of a opinion on. I try not to let that really influence how I trade. I really just try to look at price action. Yeah. So general market, I'm pausing. You brought up NVIDIA. I think and I've tweeted about it. I think it's the market's leading stock. I don't think it takes a rocket scientist to see that. And it's above its 20 exponential moving average. So for me, this is a little bit better off than the SPY or QQQ is, which makes sense. It's its own stock. It can do what it wants. But yeah, for me, there's not a ton. Like if we look at Tesla, this is below the 50-day, right? So it's even worse off than the SPY or the QQQ. So that kind of mindset allows me to say, okay, it's a mixed bag from the market's leading stocks. If you pull up Apple as well, it's getting hammered below the 50-day today, falling through down after a poor reaction on earnings. So that kind of mindset, if we have Apple and Tesla doing poorly, but we got Netflix, maybe you can look at Meta or NVIDIA as well, all kind of holding up. It's a mixed bag. And so I use that, whether I'm trading them or not, I use the liquid leading market stocks to give me views on what institutions are doing. And right now it's saying not much.
By the way, as much as I poke fun at, the squiggles, as I like to call it, moving averages do have predictive power, at least in terms of volatility. So I think the studies on moving averages are interesting. So you end up having, and this is, actually pioneered by Meb Faber from Cambria. But if you just do a simple moving average, type of strategy, you end up having pretty much the same returns as buy and hold with a lot less volatility, which tells you that moving averages are about volatility in general. Do you take directional short bets at all?
Do you say directional short bets? Is that what you said?
Yeah, exactly right. Yep.
When the market, no. Short answer, no. When the market really is getting beat up, I mean, I guess I could have, hindsight's 2020, but 2022, everything got smacked. So short bets would have been easy there, right? But no, I try to focus long only. I think as my career progresses, I'll definitely be a little bit more willing to go short, but I would say it's a little bit more scary for me in my current state. It's a little bit harder to manage risk, I guess is a better way to say that. So much scary.
By the way, I'm glad you frame it that way because I think that's often missed by people. When you short, you have unlimited risk.
Yeah.
When you go long, risk is zero.
Exactly. I mean, your risk at any point, if you're long, is just the stock price going to zero. If you're short, the stock can go infinitely higher. Your max upside is to the stock hitting $0. There's just inherently from an RR perspective, more risk if we're talking infinite versus not if you go short. But yeah, I mean, I think the market's bias is usually long, no matter what type of industry or what type of strategy. But it just gets harder to find those short pockets when the general bias is up. I guess more plainly stated, when the SPY or the QQQ are above their 50 days and they're all rising, moving average wise.
What about the options trading side? I mean, you mentioned you got in around the COVID crash in 2020, and it seems like that's when the explosion in zero DTE options, gambling, I'd argue, really kind of picked up. Did you play with that at all?
No, I mean, I'm still figuring out that side of things. There's actually a service I subscribe to called Gamma Edge. This is kind of the options way that I'm trying to learn how to use that information. But as of now, no, I don't do any zero DTE or one DTE or any of the short-term dated stuff. I think it's, if you're not careful, it's a really easy way to lose a lot of money fast because there's just more leverage you can get with options than just playing with individual stock.
Yeah, I think that's often missed by people. It's like, the surest way to go bankrupt is to leverage repeatedly, right? It's only a matter of time, right? And then, the overconfidence gets you even more leverage. And this is the thing, just goes back to the social media discussion, right? I mean, I think a lot of you correct me if I'm wrong on this, a lot of these kind of Discord plays and things that you see by, large accounts, which are largely anonymous, tend to focus more on the options trading side rather than something that's fundamentally a good stock.
Yeah, and what determines a fundamentally good stock may differ on the person, but any successful strategy comes down to risk management, no matter if it's options, stock, whatever. And so if you feel as if you're on a confidence high, just YOLOing zero DT stuff, you're going to get smacked eventually. And so I think avoiding the smackdown is one of the best ways you can ensure longevity in this market. Yeah, I mean, that's a great question. I would say at any point, I don't necessarily care what the reason is for something going up, if that makes sense. So like in your instance, seeing Rivian trucks around you, like I think Peter Lynch is a good example. I think his mantra was always buy what you know type deal. And obviously there's other very successful, I think Warren Buffett's kind of the same. That mindset works when there's just an alignment of big institutions agreeing with your thesis, right? Like me buying 100 shares or 1,000 shares of Rivian will never actually move the price. But some institution that says, okay, this is my thesis, I'm going to start buying, that's really the time that things get into action. And so I use TA to see when that point is. I think that's kind of the basis of why I use it. So whether that's confirmation bias or not, whatever, the idea is I want to be in a stock, whether it's for fundamental or whatever reasons, when big money managers are also accumulating the stock and driving price up, if that makes sense, and answered your question.
Personally, I love the genesis of that because I think it's true. It kind of goes back to the fooled by randomness line from Taleb, right? It's something maybe going up, but it has nothing to do with, a squiggle. Right, but and that's really kind of what I hit on the most. Like when I say that, right? It's like unless you can you can back test something in my world, so in my view, at least to know if there's some predictive power, then you don't know if it's real or if it's just randomness. Now, admittedly, there are cycles even to that too. I mean, I've had a hard time the last 2 years with my own strategies in the way they're constructed. But at least if you have some historical context, it does provide, if you can bet that it's somewhat real. I guess is the point.
For sure. And you can always kind of, the hard thing about backtesting, you just have to be careful. You can always curve fit results to kind of align with what you want to see. And so I think when conducting backtesting or really when studying any strategy, you always have to be careful of your own bias. Like, I think it's really easy for me to say like, oh yeah, I'm glued to the TA side of things because it's worked for me. Well, of course. I mean, we're emotional. I like making money. I don't like losing money. So if TA is my way to do it, then good. But like Dylan, in your instance, if something like Rivian, where you have a fundamental viewpoint of it, has worked for you multiple times, like that's your edge, right? That's what you do to make money in the market. And that's why it is a market. And so I always just try to not judge other people for how they view the market, but more so just want to, hey, if you made money, good job. Can you do it multiple times? Even better,
Yeah. Again, it goes back to social media, which is, people often retweet and like things which confirm their existing views. It's funny, right? It's like the last thing you want is to judge somebody else, unless it's something that is blatantly wrong, right? Because to your point, if it's working for them, whether it's skill or luck, the reality is it's working, right? Whether it works longer term, right, is a whole different question. But in a small sample, it's hard to sort of attack that the reasoning of somebody else. Now, having said that, you said it a couple of times, sort of the idea of following people and reading content that kind of jives with you and who you are. Part of learning is trying to step outside of your own comfort zone in terms of how to think, right? Which would be different from how you think, right? Kind of the anti-confirmation bias side of things. How do you go about identifying, people that you think would at least give you a different way of looking at the world of investing? Because if you only do it within the first 2 chapters, let's say, which by the way, I don't disagree with, time is short, so you want to be efficient with it. Yep. But yeah, it's like, it's hard to get out of the bias of trying to find content that jives with you when maybe you should focus on things that are just totally different. I mean, I myself have heard things about how astrology impacts markets. I don't agree with it, right? But it's like, but I still think it has it's worthwhile to put the effort, I guess is the point.
Yeah, for sure. I mean, X is cool, Twitter's cool, where there's that For You tab. And so I'll see tweets from people who do completely different strategies from me. One example is this guy named The Short Bear. I'm sure many of us have heard of him. If not, I just recently followed him and we have completely different technical strategies, but he posts very insightful commentary on the general macro stuff and even just his mindsets on how he trades. And he trades with, millions, tens of millions, hundreds of millions worth of dollars. And so I hadn't seen sort of some of his content before. And that's kind of where I'm like, oh, okay, I'm trying to, this all goes back to where am I trying to get better as a trader? And at the current moment, I'm trying to get exponentially better with my mindset. And so when he starts posting mindset stuff, I'm open to, if it's different than how I think, interacting or just pondering what he's saying. So I try to use social media in that sense. So my following will change over time as I develop and try to see where I'm deficient. And then, I know at the end of the day, like I'm going to be trading a certain way, technically speaking. So I'm not necessarily trying to learn a new strategy just yet. But when I'm open, let's go back to the options conversation. When I'm open to learning more about options and ready to kind of dive into that space, I'll try to find things that are different or content creators that are, leading a different conversation, if that makes sense.
What are some of the things that are on your watch list that you haven't quite pulled the trigger on? Again, not investment advice here, but just kind of interesting observations.
Yeah, never investment advice, obviously, but I'm looking at the stock VRT. It just recently gapped up. So I guess just to go back real quick and kind of set the stage for what I trade, I look for high volume gap ups. So we're talking like after an earnings report, something that beat expectation, raised guidance, whatever the fundamental factor is, that causes institutions to get in with, some force, that's what I'm focused on. So we're looking at something like VRT, AC, HR. Those two recently have been on my watch list. I didn't pull the trigger on VRT because the general market started crapping out. But, then we have the traditional NVIDIA, Netflix, Meta type names that, everyone's kind of crying about leading the main returns for the general market this year. But, when you're a TA-based trader, you have to go to where the money's flowing. And so those three names in terms of the liquid leaders are kind of my focus as well.
Yeah, no, again, no doubt about that. As much as I keep screaming about NVIDIA because I think it's funny, I mean, clearly that's been where the momentum has been, and it continues until it doesn't. I mean, that's always how this stuff works. For those that are maybe entering the market now, it's a very different environment today than obviously 2020, 2021, and 2022. I mean, all these periods have unique characteristics. But if somebody's entering the market now, what would you suggest they do in the first few months of trading?
Yeah, I mean, the first few months it's a lot of information all at once. So I would say start and kind of research strategies that make sense to you. If you're kind of a value-based, or you kind of like the idea of something like Rivian, right? Like where you have maybe a fundamental economical, thesis on a stock and you want to kind of go down that route, you have to find mentors, whether they actually mentor you or not, but you have to find those people who create content and write books and study the crap out of that stuff. I mean, when I first started, my first 3 months was no trading. I think that's a good key. You don't trade at all. You study, as many hours as you can fit in a day of the people that you think are going to be, helpful to your success. And then you start taking notes. And I think this is a big key that I haven't touched on yet, but just start journaling your thoughts as you watch the market day to day. So if you have thesis on a stock on January 1st, write those thoughts down and the price at which you had those thoughts, and then come back in March and say, okay, well, price is here. It's 10% above or 10% below. But that was my thesis. Let me learn from where I went wrong and where I went right. And so I would say kind of just keep it simple. First 3 months, first 5 months, first 6 months of the market, read a lot, study the successful investors and successful traders in the space and strategy you want to implement. Don't trade, and then take a lot of notes. I think that would be kind of the first broad advice I'd give to anyone just learning how to trade.
Yeah, no, I mean, I'm a big fan of just writing.
Yeah.
I feel like I think it's missed. There's actually some interesting studies around how just even moving your hand and writing activates a part of the brain that's different than typing.
Exactly.
Yeah. Which is, goes back to kind of the ancestral roots.
Yeah. I mean, anytime I study a book in the market, I can have the book on my iPad, but, I start writing with my Apple Pencil in the book notes or on a separate notes app, or if I just have the hard copy, I'm taking a pen and I'm going to town on that thing. And that's how I've learned to synthesize material. And that even goes back to the business degree type stuff, way back when we started this conversation. And that sort of structure helps me really retain information better.
Greg, for those who want to read more of your thoughts, where would you point them to?
I have a free Substack that I post weekly. It's been a little bit intermittent here over the past months as I've been traveling for competition, but I'm getting back on it. So yeah, it's called Upside Unlimited. It's in my bio on Twitter, or just, follow me on Twitter. I post a ton, trying to post more and kind of get back in the groove of the market. But I would say those two places.
I give you a lot of credit, Greg. And I say that's not for the reason, but the truth. I mean, you speak very plainly, obviously are very intelligent, and you're not, from what I can tell, a bullshit artist like I think a lot of people that I see on social media are. Kudos to you, and I wish you luck on getting into the Olympics. If you do happen to get in and you get a gold medal, at least I can say I knew you went. Everybody, please give a follow to Greg, and hopefully I will see you all again later. Thank you, Greg. Appreciate it.
Thank you so much for having me on. It's been a great conversation.
Cheers, everybody.